And
I don't really know either.
thank you everybody for being here. Welcome to February.
Woohoo! 1 month down.
Hey.
11 to go.
Hey, and
Slow down.
and who else is as perturbed as you are about this groundhog?
What a
Who
nice
sees their shadow and goes back in the hole? I don't understand that. Why does that mean 4 weeks of winter?
Because
It's folklore.
people from a long time ago were strange.
Oh, okay, they were strange. Well,
People are strange. When you're a stranger, faces look ugly. When you're alone,
and the crazy part of it, he's doing better than the meteorologists do. So that works pretty good.
there you go.
He's been miraculous. Hello, everybody online, everyone here. My name is Jamie and this is Jason. We're up here representing the leadership team who just wants to serve you and have you reach more lives because of the quality of the people that you are, and you should. All right. Well, here are our values. Ready?
Culture, integrity, impact, growth.
Kelly Williams, we take the oath. With culture, our priorities are God, family, and business, and in that order. Thank you, Brian Stordahl, again, God bless you, ironically, for leading Bible study this morning. And it's been amazing. So thank you for leading it and those who attend. And also, if anyone else has different view of what God is to them, they want to lead studies or meetings of the such, let us know. We'll get them on the books. Sound good?
It sounds delightful.
Thank you, Jason. And last week, if you saw the lovely Megan's video, it was amazing. There she is right there. Ivan came here for a, hi Lance. It doesn't help. It's a universal thing. And we got to talking with Ivan from Trust Realty, and he just started sharing some really interesting input about just the human nature of what's going on in our community. And I think a lot of places are trying to avoid the conversation because, you know, it can get, you know, conflicting. And this is how much we trust you guys, that we're willing to do that. And he went to the hospital yesterday. So unfortunately, he can't be here. That's not meant to be silly. I just told you I can change him to half stuff. But he will be rescheduling. I won't say what his illness is and such, but he checked in yesterday about 4-ish and said he probably won't be able to do this today. So bear with us as we have plan B in place. I think it's a good plan B.
As plan Bs go, it's the B's needs.
Yes, well, those could be plan B and C. And it'll be you guys. You guys are actually plan B and CC. So let's move forward. This is what we're doing today. It's a case study of I want to try getting top end dollar for a while first. We've had some of these conversations. However, we thought this would be a great time to have people share, and Jason and CC are kind enough to lead that so that you don't hear from me for a full hour. You're welcome. You're welcome. Oh, speaking of me, so speaking of case studies, I've been watching you guys and doing all this stuff. That's been super entertaining. So yeah, I put in chat, hey, chat, what do you know about me? Make the caricature. And then I'm like, okay, that's nice, right? No GQ reference, but I get it. Then I said, okay, chat, given what you know about Olivia, just through my, I did not touch anything on this, which makes it even weirder. I said, just what you know about Olivia. Please make a caricature. And this is what we got. So there's actually one dog.
Was that chicken rabbit?
Don't know why he's got a beret. We got one of those weird chickens
Rabbit ears.
with rabbit ears. And then there's like food. She got a taco. I don't know what that means. And then there's a flamingo being abducted by an alien. I swear I didn't put any of that in specifically about it. And is this Colin? I don't know. And what is orange drink? That, yeah, that's just creepy. That's just
Yeah.
creepy. And this kind of sets itself. And of course, yet another drink. So some of it's pretty dang accurate, I would say.
Well, at least there's no abusive dad. I'm your father.
So I just went back in and said, hey, look, this is someone I have a lot of respect for. Let's just keep it a little bit more simple. None of the extra stuff for all the other things I've asked for the market center and all that. And this is much better, isn't it?
Oh, the puppy love.
That's way better, right?
Oh, what about the
That's
top?
accurate, right? Espresso martini, Canadian, of course, the dogs, wine, and the charcuterie board. She loves charcuterie boards. And speaking of some of her favorite Canadian things, let's give it up for Colin Manson. I mean, again, we take for granted the quality of the people that we have here. I'm not talking leadership, I'm talking you guys. And Colin officially is a part of leadership. And we go back to these things. Colin is all of these in spades and has helped build this foundation. Upon this foundation with Olivia that Steve has put together along with y'all. So for him to take that much time and that much effort to do the economic update each year and the call-in calls, it's pretty amazing. So thank you, Colin. Thank you. Do me what? I was gonna put this picture of Colin, but I didn't want to mess with it. All right. I don't know, question about. I usually do, but not. I just saw a lot of buttons going and then it flipped. Got it, got it. All right, well, hey, stay in the know. KWPR, this is, you've seen it on your tables here. Scan it if you want to know anything and everything about the calendar. Dottie and Grace with events and marketing have worked so hard on the calendar, and we keep trying to find ways to simplify and help you guys stay in the know. And this is one of those ways, so please scan that in, have it be a part of your calendar. There's an option in there for that, my understanding. Correct. Is that right?
That is correct. And if you would bookmark it in your phone so that way it's always accessible even when you're not in the training room with the QR code. If you bookmark it, you can access it. And to add the calendar to your calendar, you can click on the calendar link and you should be able to do it from there. If not, you can send me an email and I will get you added to the KWPR calendar if for some reason that doesn't work.
Hey T, why is that better to have on your calendar than to rely on the printed calendar?
Because the printed calendar can change. We try really hard for it not to change. However, that is not updated in real time as the Market Center Google Calendar is. So for the most accurate and up-to-date information, you'll want to look at the digital.
Great example of that was this morning, right? Contract closed, had to change the schedule and just relying on the paper.
Correct. Yep.
So, thank you so much, Toddy.
You're welcome. Thank you.
Yeah, both of your brains are really kicking in today.
Yes.
And speaking of people in the know with outstanding brains, Brian Sunder. Sunder. See his mouth be shining.
All right, good morning, everybody. I wanted to talk, I've touched on this before. So back in 2008, when it all hit the fan, all kinds of foreclosures, short sales. And the reason for that is prior to that, lending was very loose. We were doing 100% financing with people with 500 something credit scores. And so, and then in 2008, those all came home to roost. Whatever went wrong in the market, now they're upside down, zero down into the home, it's easy to walk away. And now we had foreclosures and we started circling the drain and it really hit hard. At that time then, Fannie and Freddie basically said, okay, we need to structure things differently. If you have lower credit scores, you're gonna pay more. You're gonna get penalized. If you put less down, you're gonna get, let's say, penalized. And that makes sense. Lower scores means higher risk, higher defaults. You're gonna pay for that. Less down payment, you put 20% down, there's no monthly mortgage insurance. 20% down in fog and mirror, you're probably gonna make your payments. And so that's how it was structured. Well, back in 2023, they changed. So basically LLPAs, loan level pricing adjustments, meaning, hey, if you've got lower credit scores, we're going to hit you with an extra cost. Let's say it's going to be more expensive for that customer because it's a higher risk. So in 2023, they adjusted those LLPAs basically to make higher, so the green means a positive. Lower down payment, lower credit scores, everything adjusted into their favor. Meaning it's easier and cheaper to get mortgages in those ranges. Likewise, somebody's gonna have to pay because lenders are gonna want to make their money. Likewise, more down payment, higher credit scores are paying more now for the same loan prior to 2023, right? Maybe that's kind of loosening things up again. And maybe that's the trend that's happening, but that's what's going on right now. And I wanted to tie, okay, so, but, all right, for an FHA mortgage, you qualify for the mortgage insurance is 0.55 times the loan amount divided by 12 is $86.17. It's an exact calculation for FHA. But for conventional financing, it's risk-based yet. And you've got lenders lending their own money. You've got mortgage insurance companies, there's 5 or 6 big ones. They're guaranteeing the mortgage. Hey, if you put 20% down, you don't need mortgage insurance. You put 5% down, that's a riskier loan. The customer is gonna have to pay a monthly premium because they did put 20% down. They're higher risk, and so they have to pay a monthly fee to offset that risk. Well, this is still risk-based. And if you've got, 15% down and high credit scores, that mortgage insurance might be $28 a month. Almost 20% down where it would eliminate the mortgage insurance, but not quite. But high credit scores, it's going to be dirt cheap. If you flip down, let's say you go to 95% down or less, and you have high credit scores, which is the top line, mortgage insurance might be $90 a month. That same mortgage, if you've got, like a 640 credit score, that mortgage insurance might be $250 a month for the exact same loan amount. Mortgage insurance is all risk-based, lower scores. Probably every customer I talk to, I don't care what your credit score is, higher is better. It's going to affect pricing. So in the previous map, yeah, it got worse for the better customers, but it's still better than lower credit scores and less down payment. But in 2023, it got worse. Sorry. I will post the one that's missing. Basically, it's the best time to buy was yesterday. Okay, the second best time is today. The Mortgage Bankers Association and Fannie Mae both over the next 2 years say rates are going to be the same or slightly higher than they are today. So if you've got customers sitting around waiting for that 4%, I'll post it to the Facebook group, but you can show them. They're experts, so they're only right half the time. But nobody's anticipating rates dropping down to where they were before. Oh, I'm gonna wait until I get 3% again, then I'm gonna move. You show them that chart, that, you can't guarantee it, but that's not gonna happen. And your customers are gonna be sitting around waiting. You need to, let's say, educate them on the fact that nobody's thinking that. Right? They might be thinking, oh, Trump's new guy is gonna lower rates. That's short-term rates. So that's got really nothing to do with the long-term rates. That's, the market's already got all that figured out. And so something could happen, the economy takes off or it tanks, okay, yep, those are gonna affect rates. But nobody's anticipating getting back down to, 4 or 5 even. So keep that in mind and maybe use the graph that I'll post to your advantage to, knock people off the fence. It's not gonna happen. Yes.
Could you go back to that first chart with the red and the green?
Mm-hmm.
Inquiry minds want to know, so to speak. Is this kind of an accepted thing with all mortgage companies? It can really vary from mortgage company to mortgage company.
No, so these are, if you're doing a Fannie Mae or Freddie Mac loan,
Oh, okay.
conventional loans,
Okay,
we're
so
all
they're established.
correct.
Freddie, but
Yes, and maybe the government said, hey, putting pressure on Fannie and Freddie to say, hey, let's make it cheaper for the lower credit scores or less down payment. And so that's what is going on here in 2023. That's a 1.7, 5% down with a 630 score. That's a $6,000. On a $400,000 loan, that's $6,000 less cost for that customer.
$6,000 less cost for what?
If you wanted the same rate. So today, if we didn't have this adjustment, today they would be paying, it's either cost or rate. It's a blend. You can pay more to get a lower rate. But for the same 6.5%, up to $6,000 more expensive prior to 2023 than it is right now. For that,
More expensive prior to 2023.
yes, it got cheaper.
Huh?
It got cheaper. It got
Today?
correct.
Okay,
Yep, except that upper box, which was yellow and orange, those are higher credit score people, more down payment. They're paying more now than we did in 2020.
so they're taking it out
Correct.
of the people with better credit.
Correct. And there's still, the difference is that there's still lower credit scores. They're paying more, but not nearly the difference as it was in 2023.
Okay,
Oh, there it is. So this is Mortgage Bankers Association is the top line. We're right here. We were down here, back in the 2 and 3 and 4%. We're here right now at 2026 and 2027. Fannie Mae saying, 6% is it. Mortgage bankers, usually they're a little bit more aggressive or favorable, but they're like, 6.5 is where we're gonna be over the next 2 years. So I'll post this, and again, you can just, hey, if we're waiting around for the lower rates, don't wait.
thank you.
All right.
Thanks, Brian.
Thanks, Brian.
Back to you, Mike. You can open it.
On that. I missed that, so I will take full ownership.
No, it's
And, yeah, you have a bone to pick with me now. So back to Phil. All right. So he sees a shadow, predicts 6 more weeks of winter. So you all had said that you wanted to do, we should be doing more exercises in here, stuff that brings different awarenesses, especially since when Jared was here, he really talked about abundance and how we're open to it, how we're close to it. This is the example of scarcity. This guy is extremely scarce, scarcity wise. There we go. So we're gonna do an abundance awareness exercise. You ready for it?
Yeah.
That was kind of,
We'll find out.
that was a little more like that guy right there. But I understand. So real quick, what is it? A very large quantity of something, and this is what really pointed out, or came to my attention was it's the state or condition of having a quality of something. Vines and figs grew, we have an abundance of those, but that's because it was in the right state or condition, right? So what's most important though is how you define it. So what we're gonna do is you're gonna feel what abundance and the opposite is like today and how abundance moves towards availability. So darkness is known as the absence of light. Sorry, y'all. Right? So I don't know if you know in science, there really isn't a dark, there's just levels of light. As well as heat. You got the heat right here. Cold is only measured by the absence of heat. So we don't manage the dark, we add light. We don't battle cold, we introduce more heat, right? I mean, we battle cold, don't get me wrong, but not in that sense, not in that same sense. So scarcity works the same way. It's something that exists, scarcity exists where abundance lacks. Does that make sense?
Yes.
Are you with me? All right, let's feel this in action here. Everyone clench your fists. Good, good, good and tight, clench them, clench them, clench them, come on. All right, good. And, well, this is just gonna represent lack, okay? Obviously, it's not always lack. This is just representing that today. Bracing, protecting, blocking. And now look around the room. Does your energy want to flow toward these people?
Maybe.
That's
Chris got a situation.
Depends on the issue you might have with it, right? Or now open your hands. I do the same thing and open your hands. Right. Now look around the room. Does energy want to flow toward these people? Does your energy want to flow towards this? Yes or no?
Yes.
Is it good? Actually, if you really sense it, you can actually feel energy on your palms.
Yeah.
When you're like this, you can't. You can feel the muscles on your being clench, right? And there's times and places for all that stuff. But so this represents abundance. You can feel it. It doesn't take any more effort to be available. This, it's not a lot, right? It doesn't take any more. So if we can't receive with clenched hands, where in my life can I open them? Where in my life can I open them? So abundance moves. Abundance moves. So, all right, this half of the room from right here, this half, you guys make fists and face this way. That you hold a little tougher. This side, face them with open hands.
Come on in for a hug.
No, we didn't know it was gonna go that far, Will, however. All right. All right, now look around. Where do you feel good energy more apt to flow toward?
In this room. In this room.
Your
Yeah,
side.
which side? All right, now switch. Clench, hands open. All right.
You got too big of a smile on your face.
But can you feel, now switch again. You can see where the positive energy wants to go and where it stops. And do it again. Do it again, do it again, do it again. Do it again. So you see, that's what happens with abundance. Abundance wants to fill spaces. And we have areas in which we block them, right? All right, I went past my notes, so that's why I wrote them down, so I wouldn't go that far. So, all right. So it doesn't force itself. Abundance moves. It doesn't force itself. It travels where space allows it. And the principle is why more progress is made fighting for something than against something. When we're like this, people people want to come towards us. When we're like this, it's harder to fight against something. Is your business movement, or is your business a movement that people want to join? Oh, that's a little challenge in there. Does that make sense, the question? Is it something that you're super inviting as many people as possible? In different ways. Now, another question. This is a tough one. Who wants more opportunity this year? Raise your hand. Oh, that was exciting too. All right. So those of you who raise your hand, and those of you who raise your hand more exuberantly, that's gonna be helpful moving forward. So now, if you've been in the industry 5 or more years, raise your hand. Okay, keep them up. Now, of you who have your hands up, whoever wants this $50, raise your hand the highest. Who wants it? Look
I
around.
win that on. I was gonna say, how come nobody's standing up? I'm like, there you go, Jason. I'm
Lance.
All right, now, thank you. Thank you.
Ogden, come on now.
Because it's something I didn't say yet.
There's an abundance to your caveats that you're starting to.
His fists are clenched.
So at first, those who raise their hands like this, those who raise their hands like this first, got noticed less. And then here, well, abundance already started flowing that way. So by the time you're the peacock back there, some of it has flowed away. However, that was pretty impressive.
Yeah.
And now clench your fists. No, clench your fist. You can't receive it with clenched fist.
Oh.
We'll see.
What does it say?
I don't know, you probably got one of your.
An IOUs?
Of course.
I was gonna say, Monopoly money?
No, it's an IOU.
Well, she's abundance minded. There's a lot of that. So, all right, let's see if I can figure out where I'm at. I'll try to make this a little quicker now. All right. So naturally, again, the energy wanted to flow where most energy was going, right? The good energy. And scarcity itself didn't block opportunity, closed posture did. So if you've been to the games, they shoot out these amazing, t-shirt cannons. The first people they're looking for when they're throwing t-shirts to people are these people, right? Especially kids that are woohoo. Now, I don't know about you, but this guy might just drill. Because that's a little too much exuberance, right? When there's kids around, I'm like, dude, just sit down.
Hit the kid in the front.
Yeah, hit the kid in the front. That's what you say.
So you're getting ready to throw a t-shirt. You're getting ready to give out $50. You don't even notice it, do you?
Oh, I noticed him, because that's who I'm aiming at, though. Well, he's not looking.
All right.
Yeah,
That's a whole different
They
game.
get on the phone?
yeah.
That's a whole different game. But did you feel where that's going? Their energy wants to go where people show up and where people are open. Does that make sense? Does that make sense?
Yes.
All right. What else we got here? Just make sure. So just, can you feel the difference? How is your curb appeal right now? Seriously, about curb appeal. Why do we work so hard to have great pictures online? And of course, lit up well at night, because we want to attract good, right? I'm not saying you in general are this, or myself, or anyone here in general, it's just this. There's just many different aspects of our life over this. No trespassing, we're blocked off, we're scarce. What more of these situations can we turn into this situation so we can receive more? So, what What areas of my life can I change my posture to start receiving more? There are areas that you can think of. That'd be amazing. That is what Jared had talked about with being open to abundance. It's not, it's more of a universal law. It's actually a spiritual law as well. It doesn't mean, I'm not talking about what do you call it? What's that book? The Secret. I'm not talking about The Secret. I'm just talking about opening or closing doors to energy you want or don't want. Be aware of that so we can hit our goals. We can be who we want for our family. We can serve our community how we want and be fully present. Thank you. Ladies and gentlemen, we have a case study, and it's all you guys led by Jason and Cece.
Piper's like, I've had enough already. I've had enough. Those two haven't gotten up there and I'm already bored. Hey, thank you, brother. Jamie's getting us aboard, but we've done some case studies before, and this is where I'm starting to write. But we want to talk a little bit today about, this is a common concern / problem, and you can convert that to a lot of things. And I say I want to try getting top end for a while first. There's also the opportunity, the objection that we're hearing is I want to wait. I want to wait to do what you say, right? You're advocating for a certain amount of money, but I want to do it for more first, right? There are also subsets of the same objection that would be, I want to wait for the spring market versus now. I want to wait. I don't want to do the thing you want to do. And we want to talk a little bit about what that looks like and what we do collectively to overcome that, what your best ideas for that are, and we can share that in a somewhat mastermind style. The first question I always ask when I'm looking at an objection or thinking about objection, because planning to overcome objections is how you actually overcome them. Nobody's very few of us are fantastic speakers in the moment with no idea what's going to happen. We got to think about it first. See, I just had to think about that one. You have to think about it first, and then when you think about it, you come up with some good answers. And I think we can all appreciate that George Costanza moment where you wish you would have said, if only I knew, then I would have said this. And then if you follow that particular analogy, you go back and try and recreate the scenario so you can do it again right. I don't think that works. But a lot of times your clients are going to say that. I want a price higher than what you're recommending. And let me ask you this, is that an emotional objection or is that a factual objection? It's emotional. And our often base instinct is to explain all the facts about why that's not the best idea for them. And if you answer emotional objections with facts, you set yourself up to be in a place where you're argumentative and not really changing anybody's mind. Has anybody heard anything recently where you looked at that and you looked at the thing and you said, why are you saying that? The people who agree with you already agree with you, and the people who don't agree with you are not going to change their mind. 9 times out of 10, it's a logical response to an emotional discussion. An emotional response to an emotional question or objection is what's necessary. And the general formula that we talk about for that is, and if you have the opportunity to go on Colin's call at 9 o'clock in the morning on Tuesdays, which I highly recommend if you've never been on there, and if you have been on there, I recommend making it a habit because it's only 15 minutes. And you can get some of the best 15 minutes of quality information you can get in that time. But the formula he always uses, even if he does not use the exact words, is feel, felt, found. Corey, you understand how you feel? Many of my clients have felt the same way. What they found out is That is the formula for the objection. So if we were talking about this from a classroom perspective, I want to try getting top end dollars for a while first. Hey, Pam, I know how you feel. A lot of my customers felt that same way. I have to connect to the emotion. I want you to know that you're not alone in this. That's a real feeling you have. It's justified, and as a person, you get to feel how you feel. But I need to communicate that first. So you push it up, right? That's good. Right? Never panic, right? But I need you to know that that's okay to feel that way. Understand how you feel? A lot of my clients have felt the same way. What they found out is if they were priced above the market, what happens?
Sit for a long time.
They miss valuable time because the house sits there. My job, and we talk about it a lot as realtors, what is your job when you have a listing, Pam? To get it sold, right? And if you hang out with my friend, I can't think of his name, but we went to a conference with him just a little bit ago, and he does a fantastic podcast. His name is Jimmy Shaw. And he talks about, am I outcome-based or am I process-based? And that's an outcome-based result, right? The goal is to get your house sold. And if that's the focus, that's when you get paid, that's when the customer feels happy, but there is a process to this. And my real job is to market the properties, to get as many people in that house as I possibly can, so that they will make offers. I can't control whether anyone will buy or sell your house, but I can absolutely control how I market it to other people such that they would be interested in doing it, right? So sometimes we get off on that tangent in that kind of space, but we want to answer that in a way that we make it clear for our clients what we're trying to do, so that when we say, Kelly, I know how you feel, a lot of my clients have felt the same way. What they found out is by pricing it above the cost of the market, they did not get as many people as they wanted to look at it. And you can imagine that the number of people looking at your home has a direct correlation to how likely it is to sell. Only takes one. That's absolutely true. And I'm going to recommend at some point you're going to say it only takes one, because it does only take one. But if I get 50, it only takes one of them. If I only get one, it's a lot harder. So this feel, felt, found is 100% the emotional way to start connecting to an emotionally based problem. Let me ask you this, because y'all know that I enjoy, to a certain extent, not doing what I'm told. In fact, the firmer you tell me what to do, the more likely it is I'm going to resist that. Just say strong correlation, not perfect, but pretty much. And there's certainly somebody in the room who can 100% validate that that is 100% true, right? But if I come back and I jump, and that's because we haven't addressed the emotional part of this discussion. The emotional part is, I want to do what you tell me. I don't. I just don't. I don't know why. That's the way I was wired. I fight authority. Authority always wins. Thank you, John Mellencamp. But at the end of the day, feel, felt, found matters. And if somebody understands why I'm reluctant to do that, they can address that situation much better and get me across the finish line. Right? So I want to try getting top end dollar for a while first. What are they really saying? What are they really saying? Any ideas? I mean, you've all worked with clients. What are they really saying?
They want the most net.
Most math, thank you, Cece. What other things might they be saying in that space? Sorry?
I know more than you.
I'm smarter than you. 100%. They are 100% I'm smarter. What else might they be saying?
I don't trust you yet.
I don't trust you yet. Absolutely possible. What else might be in part of that process?
I'm not quite ready to sell yet.
There you go. I'm not even ready to sell yet. Right? There's so many things that are here in this space about their feelings. And if your answer is, well, you know, the market says that we shouldn't do it that way, you really haven't even understood what the problem is yet, right? And so while we would use this framework, before we even begin, what do we need to do? Just as humans, any ideas? I hear it, I heard it, I heard a whisper.
Ask questions.
You've got to ask. And our good buddy Phil Jones would have said something along the lines of, the less talking you do, the better. The more questions you ask, the more information you're going to get. So I want to try getting top end money for a while first. Cece,
Yes.
why, being that this is an important decision for you to make, why do you feel like that's going to get the best result for you?
You're asking about.
I'm asking you, if you were selling your house, why do you feel like waiting or putting it at top end dollar first would be helpful? Why do you think that?
Well, I hear my neighbor did somewhat the same thing and she really liked the price. She got more than she asked for.
Okay, cool, right? I mean, that's all we want to know. Why? Because I think my house is worth more than that, which isn't on this list, right? I think my house is worth more than you said, which is actually one of the bigger things right in there. And they're never going to say that. I think it is ultimately, I don't trust you, right? And all of these things are sometimes broader, sometimes narrower, but I need to understand exactly what it is. My neighbor did really well. My cousin's brother's uncle is a realtor, and he said you should always price high so you can negotiate down. Wow. Why is your cousin's brother's uncle not here selling this house right now? Because he doesn't know. Melanie?
I think I don't know you is a huge thing because,
I don't know or trust you.
yeah,
I don't know you well enough to have you make this important decision. Do we say this is the most important financial decision that these people are going to make in their lives? Do we say that to ourselves? Do we say that to them as part of our pitch? Do we believe that? Because if we believe that, then we really need to get into the dirt and the weeds on why are you not ready to do this yet? Because it's the most important financial decision. I'm a fiduciary. I have a responsibility to educate them on this. But I also have a responsibility to help them get there. And not just because I said so, because if I said so, anybody ever done something they've been told and have it not work out? If you've done something you were told and it didn't work out, who's to blame? The person who told you, right? It ain't about you. Look, I'm your advisor here. I'm not telling you how to sell your house. I'm telling you what works. And you need to understand what works so that you feel comfortable making these decisions. So I want to get top end dollar. Those are some reasons why. Steve, if somebody said they were after the most net, ask them that question. Say, hey, Steve, the reason I want to put my house top end for a while first is to get the most amount of money. How would you respond to that? How have you responded to that? It's an even better question.
Why? That's a great question. Have you had a lot of experience selling for the most amount of money over, your lifetime of holding homes?
Okay, now let me add everybody out there. Does that feel a little abrasive? Maybe, and that's okay because that's Steve. Okay, but also I'm going to have two answers for that. Either I'm going to say no, I have no experience with that. I'm going to maybe if that's the way I respond to it. But the other thing he really says is I really don't know what it takes. And sometimes the direct question is the best question. But what's most important is he asked a question. He didn't tell me that the best way to get the most amount of money is to do what I said. He said, have you had experience with this? Because I need to understand where you're coming from. And if I have had experience because my cousin's brother's uncle's sister's realtor said that I need to do this, that's the experience I'm going to give him. And now he's got another piece of information to work on and breaking down the emotional reason we're doing this, because this is emotional. There is no fact that supports any of that. So I've got to get through to the emotions, and the emotional attachment of the client is to their cousins, brothers, sisters, uncles, friends, who is a realtor, not you yet. So it's super important that we start there. All right. Kelly, I'm smarter than you. If that, essentially, that's the air that they're gonna have, right? People are gonna have that air. How do you, what would you go with that? Where you kind of get that vibe that they just know everything? I mean, you've been already talking with them and they've countered with, well, this and this and this and this, and the neighbor sold it for this, and my house has got this, and that's all I'm smarter than you, right? They don't ever say that, hopefully. God bless, but they might. How would you respond to somebody who's giving you all these kind of details when you say, and then, you know, I want to try some of my own top end first?
I would probably, kind of going back to what you, when you mentioned Phil Jones, and maybe this isn't even his, maybe it was somewhere else, but, you know, like they had to come back, well, we can always negotiate down, or someone can always, you know, make a lower offer. I would probably just ask the question, would you, you know, do you want to price high and negotiate down, or would you rather price where I'm suggesting, where the market would indicate, and be able to negotiate up?
Okay, anybody thought about that? Would it be better to negotiate down or negotiate up in your mind?
Negotiate up.
It seems like negotiating up would be a better choice, right? What am I really afraid of if I price my house low?
It'll go
Lower than I think. What's that?
It'll go lower.
It'll go lower. Let me ask you a quick question, Lance. If I could produce a buyer for your personal home right now for $1, would you buy it? Or would you sell your house for $1?
No.
Oh, cool. So no matter what the price is, if you don't like it, what can you say?
No.
No. So if it's too low, you get to say no. Now, there's a reasonable point where you might say, as the consumer, I might say, well, if we price it so low that I'm automatically going to say no, why would I price it that way? And that's probably a good point. If the market has identified a price for your house and you need more than that, we need to talk about that. Not whether my price is right, but why the market is priced that way and why you think your house is worth more than what the market is already indicating. Right? So we have to get to that point of agreement first. Because if you really think that if I priced it at 470 and you think it's worth 490 and we're going back and forth, but you can't take 470 for it, we might not be ready to sell that. And that's okay. I'm your fiduciary, not your salesperson. And I have to recognize that that's okay. I'm not going to be able to sell everybody's house for the price they want, right? Makes sense. So I'm smarter. I like that question because it does put it in a very clear context. Would I rather negotiate down or would I rather be able in a situation where I can negotiate up? Look, I've got multiple offers right now and your offer is just not high enough for me to take.
That's a good position to be in.
I'd rather be there than, yeah, I got no offers. I got to be honest with you. That's a much better place to go. All right, short space. Jim Lee, how do I build trust with somebody? I don't trust you. I mean, that's really what they're saying, right? I don't agree with your pricing. How do I get there? Because that's emotional and factual. That's really right on the line, right? There's part of it that's emotional, but also it's very factual. I don't know enough. You haven't explained enough. You haven't made it clear enough why we're here at this price. How might you address that? What's a question?
What's a question?
Anybody else got something?
Or how do you know?
A question back to that. I do it through showing them like data and stuff and then do an interactive conversation with them to talk through pictures and then showing them how do you think your house compares to this property and what do you think for improvements of your house and your value compares to this one and try to do an interactive discussion to get them to the price we need to be at.
So we're still having the conversation. We're still asking questions. We're still discussing what they're seeing that has led them to this place. And by having that continued discussion and having these other things for them to think about in front of them, here are the other houses, here's what they sold for. Honestly, if you had $500,000 right now, would you choose that house or yours? And the answer is, well, I'd probably choose theirs. Well, then 500,000 isn't the right price for your house. Right? Because that one is available for 500,000. Yours could be, but most people are gonna make the same decision you do. And we also have to be comfortable with the fact that my neighbor's house, even though it's less square footage and has one less, or it's more square footage and has one less, or one more bathroom than I do, my house is still worth more because it's the house I live in and it's way better than theirs, right? If their house is better, it's all, mine is still always better, no matter what the facts are. So divorcing that part is an important part of this stuff. How do you know if somebody's ready to sell, Tony? You've been through this probably a couple times, and there you've probably had that conversation where they're not. They won't say that. They called you, right?
I think oftentimes they're not ready because they have a number that's not based on the market. It's based on personal needs. I need to pay off this car and have X amount of a down payment and closing costs to buy the next thing I want. And if I can't get that much, then I don't want to sell, right? I don't have what I need. So the value they're looking at has nothing to do with the value of their home. It's financial things they actually, initiatives they want, right?
So how do you extricate yourself from that? Because I mean, you can't produce that number, can you? It's not worth that. So you're gonna have to get out of that conversation. How do you gracefully give them the option of selling their house or not?
I think you go to that feel felt amount. Like I completely understand this is super normal that I have people that have X amount that they really want to take away from their house and that requires us to sell for X. But the value of your home is not based on what you need, just like what you paid for the house wasn't based on what the people before you wanted. It was based on what the market, the number of the market puts on your home. And that's the data we have.
What I love about that response is it puts them back into the same space. That there were other sellers and those sellers did business with you and it probably wasn't what they wanted either. And you are now in that space, right? And I love that as humans, we all think we're the smartest person in the room, except when we're kicking our own butts over things that don't make any sense. But we all do think we can time the market instead of being in the market for a amount of time. We all think we can pick the right time. We can buy the stock below and sell it the high. We all think that we're good at that, but the evidence is we're not. And when that person sold their house, you might not have been the best negotiator, or maybe you were. But at the end of the day, they probably didn't get what they wanted. And you may not either.
I think one of the hardest things is when somebody overcapitalizes on their home and they just sunk in like $80,000 into new windows and got a bunch of stuff, spent, $100,000 on a new kitchen and just did a bunch of stuff that they're like, it is worth this because I just did all that. And they're already overextended because they overcapitalized and they think that they're going to get exactly what they paid for that kitchen back out of it. Or for those brand new windows. And it would take years of depreciation to get your money back out of it. So
it's a tough spot to be in, right? And one of the things I really loved about Phil Jones talking is, are you a 30, 60, 90-day realtor or a 30, 60, 90-month realtor? Obviously, every lead that comes your way, you're going to take. And if you don't have a lengthy relationship with them, you're going to have to adapt. And in the case of somebody overextending themselves on what's valuable about their home, you're going to have to adapt in that moment. But if you're a 30, 60, 90-month realtor, and you're earnestly working with your clients over the course of the time that they exist, before they're making those sorts of improvements to their home, I feel like there's a place for you to be aware. There's a place for you to earn that level of trust that they might ask you, hey, should I do this? And again, in that case where they're a long-term client, hopefully you can help them see the value. or the not value of making those decisions. I want to improve my house. I want to do this. This would be useful. This would return you some money, but like we talk about every discussion we have when we're talking about a listing, if I set my expectations up front, it's a lot easier. And if I set the expectations of how much you're going to get back on that improvement when you're thinking about making it, I win the game. So how does that allow me to make a different quarterly call to my clients? Is that even on my radar when I'm making a quarterly call to my clients? Am I even saying, what are your thoughts about, you can do any upgrades on your house? Or are we looking for the sale in a 30, 60, 90-day fashion? Or are we looking for the client and the fiduciary interest that we have with them in the 30, 60, 90-month client that we're really trying to build? Look, sometimes we haven't even thought about these questions, and that's okay. That's why we do this. But the 30, 60, 90-day answer is, I'm not asking those questions. I want to know if ever you sell. And the 30, 60, 90 month might be, hey, what sorts of improvements are you looking at doing in your house this year? Comma, I know a guy. That's a great place to be. Because then they want to talk to you on a regular basis about their house. I'm here to help you with this all the way through. And that can be super important. So I really thank you for that. That's a great point. And how do we go with my house is worth more? But I feel comfortable, Scotty, that you would, if given a bat and this was a ball, you would knock it out of the park. But my house is worth more. How am I going to respond to a client? That's that you can tell. That's their core belief. They might even say that, but they know it. You know it.
I speak in parables, so like I find something for them, like, you know, I have one friend that she posts a bunch of stuff on eBay. She buys a bunch of stuff on eBay, and I'm like, have you ever seen something go on eBay and you're like, ah, it's not worth it? And you know that if it sits on there for 2 weeks, you can make a lowball offer and get a good chance of taking it out of their hands. So I just find, based on what I know about them, a way to bring it back to something that they can relate to. And I love what we said over there is putting them in the buyer's position. Because the home's worth what the market says it's worth. And when you talked about negotiating earlier, you don't get to negotiate if you don't have offers. And the only way you get offers, it's a numbers game. I have all the stats to show you need, yes, it only takes one, but if you had 20 people looking at your home, the chances of getting an offer or multiple offers is better than 1 or 2 people who think the price is too high. And sometimes I make the joke, oh, so you're a gambler. I like that. I like to gamble.
All of those things are the emotional setup for the factual response.
Yeah.
The parable is an emotional way to connect with people, to inject facts into a situation. When we were kids, we all learned about the tortoise and the hare, right? And that was a nice, convenient, well-written discussion about taking your time, doing it correctly, and getting things done versus rushing through it. We understand that lesson. We may not apply it all the time, but we get it. And that was a great way for them to deliver that tale. The emotional, the parable, the story is a great way to overcome our initial desire, which is to bust out that little chart in MREA and show them that you're chasing the market, right? Or to put in front of them all of the options that they could have, or the other things that are out there, all the facts you have and all the stuff you've prepared, when you first need to make sure that you've got the connection worthy of explaining that. And from my experience in selling, it's just called earning the right. You've got to earn the right. Have it, you will get there, but you've got to earn the right to deliver it. Cece, any final closing thoughts?
I was just thinking about Scotty's response and just thinking about how stories are just stickier than facts.
It's just that simple.
Just that simple.
So practice, lots of practice. Anything else that we can provide before we turn Jamie on up back here? Take us home, big guy.
All right. Well, thank you very much. Let's give it up for them. I heard a lot of this. Somehow too, with this, we got to move them to an abundance mindset, right? This is a lot of scarcity. And speaking of someone who is always full of abundance, is we do not have official lunch, but we do have the Raw Report cereal bar in there. Hey, let's go. Thank you, Steve. We have Big H Mastermind here in a half hour. Stick around, have some conversations, and enjoy one another. And thank you for letting us enjoy you today. Steve, how are you?
Oh, you did.
I am so sorry. I'm terrible. I felt bad. I went, oh, okay, Steve. We get some coffee, Tom. Why don't we get some coffee, get ready for you?
Here's what other options I can cover. Yeah.
What they wanted, yeah. It didn't work out.
Yeah. And then we have,